So you've got a notice from the IRS in your hands, and right now you're probably trying to decide, should I do something about it or throw it away? My name's David Hilliard, audit specialist and enrolled agent with Granfield Tax. And before you throw that notice away, let's talk about what can possibly be going on. First off, what is an audit? An audit is a review of your financial information or your bank accounts in order to confirm that it has been reported properly on your tax return. Now, there's three types of audits. You have a correspondence audit, you have an office audit, and then you have a field audit. The most common type is the correspondence audit. Now, as the name suggests, you're going to be dealing with this through correspondence, through letters. This type of audit usually deals with one item, and it's usually a mismatch. It's usually computer-generated information. So if you had some W-2 that you didn't report or a 1099 that you should have reported and didn't, this sort of thing, this is what this audit is about. Generally, these correspondence audits will have an amount assessed or due on the notice. Now, this is basically a combination letter. Basically, they're saying, hey, we think you owe this money, pay it or prove us wrong. These are usually simple to deal with. It's usually a matter of proving them wrong with the receipts or backup that you have. The next type of audit is called an office audit. This audit is, you're going to go down to the IRS office. You're going to deal with a tax compliance officer. And these are kind of mid-range audits, and it's usually going to deal with 1 to 3 items. You're going to bring in your substantiation, your receipts, all your documentation. You're going to sit for 2 to 4 hours with this tax compliance officer and go through this audit. The last type of audit is known as a field audit. Now, when someone is sweating bullets and just talking, oh, I'm being audited, this is what they're talking about. This is the audit that's going to take place at their place of business, possibly their home, in the representative's office. But this is a large-scale audit, and these tend to be very complicated. So if you're, for say, an owner of a cash-intensive business, this is what you're going to be going through. So you ask yourself, well, how am I chosen? Why am I chosen for an audit? One is it's hinted with a correspondence audit. There's a lot, the IRS has the ability to match information through their computer systems. If you have a mismatching 1099 or mortgage interest through your 1098, this is the sort of thing that's going to come up with an audit notice. Another thing that the IRS uses is called the discriminant index function, or a DIF score. Now, the DIF score allows the IRS to pinpoint returns that are going to have errors. And every return has a DIF score. And no one really knows how a DIF score is calculated, but you can kind of get the hint of what they use. The IRS uses 3 facts. One, wealthy taxpayers have the means and motivation to hide their money. 2, Schedule C filers tend to overestimate their expenses and understate their gross income. And finally, taxpayers who want to cheat usually do that by overstating their cash charitable contributions. Another reason that the IRS chooses you, and this one is kind of the truly random way that the IRS picks you, and it's called the National Research Program. This is a way of fetching the data that feeds that DIF score, and the IRS will typically just go in and say, we need a few returns from this industry. They're going to review them. They're going to study them, and that's how they build their information for their internal functions. The last way is informants. So if you've been pissing off your ex-wife or an ex-business partner, the IRS will consider those accusations as means to select you for audit. So now you ask, well, realistically, what are my chances of audit? Well, on average, it's going to be 1 to 1.5%. Now, if your income is high, like let's say you have $10 million, 27% of taxpayers earning over $10 million were audited. Probably because the IRS just sees them as having a high tax bill that they can possibly collect. So it's a business practice to go after what they deem to be a successful audit. Where are they going to be most effective? So you ask, what should I do? Well, you need to respond as quickly as possible. This process will move forward without your input until levies and collection actions start occurring on your bank accounts and possibly your wages. Now, you do have the right to representation. These audits can be complicated and time-consuming, and hiring a professional in the beginning can save you that time, can save you the stress, and can save you the money in the long run. If you need any help with your tax situation, I'd like you to email, call, or comment below, and I'll answer any questions that arise. And if you found this video informational, why don't you like it, subscribe to our channel, there'll be more videos coming along. Once again, this has been David Hilliard with Granfield Tax, reminding you not to get effed in the tax.